It's Tuesday, the 1st of April 2014. We're looking at a daily chart of gold. You can see that gold bottomed out at 1182, 1183 area at the end of December, and we've had a really good rally right through to the middle of March. When we saw this negative candle, this spike higher and lower close, we called a top to gold, and we did expect it to come lower, but it has in fact come down even further than we'd expected. A significant drop off in the last couple of weeks has taken us to more than 50%. We've retraced more than 50% of that rally up from the end of December, so quite significant. Where are we now? We've got this little trend line here, which you can see. We just broke below that yesterday, and that's held the top side, this move higher today, which is around 1288. We've also got this 50% fib line at 1287, so 1287, 1288 is immediate resistance, and we have struggled there today, been unable to break through there. But we are severely oversold, and we have been for well over a week now, which does make me think that this is vulnerable to a sudden spike higher. There must be a lot of people looking at gold and thinking this is a decent chance to buy into it. We've got the 100-day moving average here at 1271, 1272, so we really do need to hold above there now, otherwise we're going to be dipping down to this next Fibonacci support at 1262. If we look at the shorter term 4-hour chart, you can see we've got a bit of positive divergence here on the stochastic. You can see that this low here, just that we're forming now, is above this low that we saw back on the 27th of March, so potentially they're a positive signal, but we're going to have to see if we can climb through the 1287, 1288 area, as I said, this trend line, and at least make it up to the 200-day moving average, which is at 1296 at the moment. If we can get through there, we can look at yesterday's high, which is 1298. It's the high for the last 2 days, actually, 1298, 1299. So these are the sort of areas we're looking at in the immediate future. We're sort of sitting right between the 100-day moving average at 1272, 1271, and the 200-day moving average at 1295, 1296 area. So it's a case of which breaks first, I think, to give us a clue for the longer term future direction.